What if the blueprint to escape the modern debt trap is thousands of years old? Consumerism keeps you broke, but ancient biblical laws build true freedom. Stick around for Law 5. It saved families from ruin during the Depression. First is the law of the ant. Observe the ant who has no boss, yet gathers provisions in summer. For our ancestors, this was pure survival. They didn't wait for a winter crisis to stockpile grain. They prepared when times were good. Today, financial planners call this paying yourself first. Modern economic data proves that relying on willpower to save money at the end of the month simply fails. The practical move? Automate your wealth. Set an automatic transfer so a portion of your paycheck hits a savings account before you can spend it. Next is Law 2. The rich rule over the poor, and the borrower is slave to the lender. Our ancestors understood that owing money meant losing personal autonomy. In ancient times, debt literally forced you to work someone else's fields instead of your own. Today, modern financial planners point to the crushing math of a 25% APR credit card as proof. Consumer debt traps you into trading your future labor to pay for past purchases. To apply this, attack high-interest debt relentlessly. Use the snowball method to systematically buy back your freedom. Next is Law 3. Wealth gained hastily will dwindle, but whoever gathers little by little will increase it. Ancient farmers knew you couldn't force a harvest overnight. Our grandparents who built security penny by penny rejected the speculative frenzy that wiped out millions in the 1920s. Modern financial planners echo this. The math of compound interest proves that chasing get-rich-quick crypto pumps or day trading schemes usually ends in disaster. The practical application? Stop gambling on overnight riches, invest consistently, and let time do the heavy lifting. Law 4 is the rule of 7 portions. Invest in 7 ventures, yes, in 8. Ancient merchants knew the risks of shipwrecks and famine. By spreading their cargo across multiple ships, they ensured one disaster wouldn't wipe out their family's livelihood. Modern financial planners call this exact principle diversification. Decades of economic data show that putting all your eggs in one stock is a massive, unnecessary risk. To protect your wealth, don't bet your savings on a single company. Use broad index funds to safely spread your money across hundreds of businesses. Law 5 is the strategy of budgeting. Suppose one of you wants to build a tower. Won't you first sit down and estimate the cost? This principle saved families from ruin during the Great Depression. While others spent blindly, survivors tracked every penny and lived strictly below their means. Modern financial planners agree a budget isn't a restriction. It's a tool. Data proves tracking spending is the fastest way to build wealth. Stop guessing where your paycheck goes. Use a zero-based budget every month so every dollar gets a specific job. Next is Law 6, the danger of co-signing. It warns that a person lacking sense puts up security for a neighbor. Ancient societies knew tying your fate to another's debt was foolish. If they defaulted, you literally lost your cloak or your freedom. Today, banks demand co-signers for one simple reason. Their data shows the borrower is statistically likely to fail. The bank wants you on the hook when they do. The practical rule? Never co-sign alone, even for family. Protect your credit and your relationships by simply saying no. Next is Law 7, the Principle of Diligence. It states that the plans of the diligent lead to profit, while haste brings poverty. Historically, wealth wasn't built on viral trends. Craftsmen spent decades mastering a trade, relying on persistent effort instead of a lucky break. Modern wealth studies completely validate this. Data shows most self-made millionaires didn't inherit money. They simply saved and invested, consistently over 30 years. The practical application? Embrace boring consistency. Ignore frantic hustle culture, stick to a steady financial plan, and let time do the work. Next is Law 8, the Wisdom of Counsel. Plans fail for lack of counsel, but with many advisors, they succeed. Ancient kings and merchants never made massive financial moves in isolation. They relied on trusted elders to avoid emotional blind spots that could bankrupt their families. Modern financial planners echo this. Economic data proves investors who consult objective professionals consistently outperform those who panic sell alone during market downturns. The practical application? Stop taking money advice from broke friends. Consult a fee-only fiduciary to objectively review your financial plan. Next is Law 9, the honest scales. It states honest balances are the Lord's. Ancient merchants using rigged weights made quick profits but were eventually blacklisted. Our grandparents' new reputation was the only currency that guaranteed survival during hard times. Modern business experts agree. Economic data confirms that in the age of online reviews, side hustles built on total transparency drastically out-earn those relying on shady tactics. The practical application? Build your wealth on pure integrity. Over-deliver value in your job or business, because a bulletproof reputation is your greatest long-term asset. Next is Law 10, the necessity of contentment. Be content with what you have. Our grandparents survived the Depression by realizing wanting less was the ultimate life hack, making them immune to the endless cycle of upgrading. Modern behavioral economists agree. Data shows lifestyle creep is the primary destroyer of high incomes. When you stop chasing status, advertisers lose their power. The practical move? Practice daily gratitude to crush the urge to spend. If you're tired of the modern debt trap and want to build real wealth, hit that subscribe button. Next is Law 11. The love of money is a root of all kinds of evil. Ancient leaders knew making wealth the ultimate goal corrupted the soul. Our ancestors viewed money strictly as a tool, never an idol. Modern financial psychologists agree. Studies show people obsessed with accumulating cash at the expense of their relationships end up miserable, regardless of their net worth. The practical move? Keep money in its proper place. Use it to buy back your time and protect your family, but never sacrifice your character to get it. Next is Law 12. A generous person will prosper. Whoever refreshes others will be refreshed. In ancient societies, hoarding grain during a famine made you a target. Sharing your harvest built a fiercely loyal community that protected you when your own crops failed. Modern wealth psychologists agree. Studies confirm that charitable giving instantly shifts your brain from a scarcity mindset to one of abundance, often expanding your network. The practical application? Build giving. Into your monthly budget, donate a small percentage locally to break the grip of modern greed. Next is Law 13. It describes the overgrown, ruined field of the sluggard. In ancient times, inaction was deadly. Procrastinating on planting crops or fixing walls guaranteed your family would starve during the harsh winter. Modern financial planners see the exact same ruin today. Data proves that waiting for the perfect time to invest or ignoring a stagnant career destroys your wealth-building potential. The practical fix? Stop putting off your financial growth. Take 1 hour this weekend to review your accounts, update your resume, and finally open that retirement fund. Next is Law 14. The value of an inheritance. A good person leaves an inheritance for their children's children. Ancient families didn't obsess over retirement. They built multi-generational foundations. They planted olive groves knowing their grandchildren would ultimately harvest the fruit. Modern estate planners completely agree. Statistics show that without intentional financial education, family wealth usually evaporates by the 3rd generation. The practical move? Shift your timeline. Secure term life insurance to protect your family today, and start teaching your kids basic financial literacy so they don't squander your legacy. Next is Law 15, the principle of fair wages. Do not hold back the wages of a hired worker overnight. Ancient agrarian workers lived day to day. Withholding pay wasn't just bad business, it was economic oppression that destroyed community trust and ruined a landowner's reputation. Modern labor economists completely agree. Data shows businesses paying fair, on-time wages to see lower turnover and higher profits, while underpaid employees quickly jump ship. The practical takeaway? If you hire help, pay them quickly. If you're an employee, consistently track your market value and aggressively negotiate your worth. Next is Law 16, the folly of the glutton. For the drunkard and the glutton will come to poverty. Ancient communities understood that a lack of physical discipline directly destroyed resources. Wasting the harvest on immediate, excessive pleasure left nothing for the inevitable winter. Modern financial experts agree. Data confirms that extreme consumption, whether it is chronic overeating, excessive drinking, or impulsive online shopping, acts as a massive, invisible leak in your monthly budget. The practical fix? Audit your consumption habits. Cut out the expensive vices draining your wallet and redirect that cash into your emergency fund. Next is Law 17, the power of humility. Humility brings wealth, honor, and life. Ancient leaders knew arrogance preceded ruin. Kings who overestimated their wealth to wage ego-driven wars inevitably bankrupted their kingdoms and starved their people. Modern behavioral finance completely agrees. Economic data proves the most devastating financial mistakes, like over-leveraging real estate or financing luxury cars to impress strangers, are driven purely by ego. The practical fix? Stop trying to look rich. Drive the reliable used car, ignore the Joneses, and let your hidden net worth be your true status symbol. Next is Law 18, Sowing and Reaping. It states whoever sows sparingly reaps sparingly. Ancient farmers knew you couldn't cheat the dirt. Hoarding seed out of fear guaranteed a pathetic harvest. You had to commit resources to the ground to survive. Modern financial planners completely agree. The undeniable math of compound interest proves that withholding your money guarantees total economic stagnation. The practical application? Stop hoarding cash. Plant your financial seeds today by aggressively buying income-producing assets, so you reap the harvest of true freedom tomorrow. Next is Law 19, the freedom of the Sabbath. It commands a strict day of rest from all labor. Our ancestors knew non-stop work destroyed both the land and the worker. Mandated rest was a radical economic strategy ensuring long-term survival. Modern productivity experts completely agree. Data proves burnout is a massive financial liability. Hustling without a break inevitably leads to costly health issues and career crashes. The practical application? Schedule a hard stop. Protect one day a week where you spend $0 and do zero work, recharging your ultimate wealth-building asset, yourself. Finally, Law 20, the ultimate treasure. It warns against storing earthly treasures where moths and rust destroy. Our ancestors knew physical possessions were fragile. Relying on extravagant goods meant your wealth could vanish overnight. Modern financial planners agree. Chasing depreciating assets like luxury cars or fast fashion guarantees you stay broke. The fix? Buy appreciating assets that outlast you. By mastering these ancient laws, especially the budgeting secrets of Law 5, you permanently escape the debt trap. Which historical wealth strategy are you voting to try? First, drop your number in the comments below.